What's up, you guys? Welcome to Financial Firefly. My name is Fernando, and welcome to another weekly recap with my M1 portfolio and my Robinhood portfolio, my actively traded account over here, and my M1 dividend growth portfolio here. A lot of quarrels with Robinhood recently. I might actually switch out of them, but a lot of news this week, so we'll start with the Fed cutting the rates in response to the coronavirus, which is now out of control, past the point of containment and quarantine. In response, the markets have responded accordingly. Everything is down. Last week was the worst week since the financial crisis of 2008, and today is now the worst day since 2008, even more so worse than last week. So bad, in fact, the New York Stock Exchange actually triggered its first breaker, circuit breaker, kind of an overcurrent protection device for the stock market, and that is if stocks fall below a certain threshold, all trading is halted for a period of 15 minutes. If the second threshold is met, traders are frozen for another 15 minutes. And if the third threshold is met, all trading is gone out the window and the session is closed. And those thresholds are 7, 10, and 20%. And today we triggered the first one. So let's just get right into it. We'll start with the update on the coronavirus, just what's happening with it, where it is around the globe, the numbers, and the general outlook, some unknowns that are still up in the air. We'll get into the Fed, we'll get into Robinhood's handling of the last couple weeks in their outages, my M1 finance portfolio, and then we'll close with some positive notes on opportunity. Let's get started. Alrighty, welcome. So this is the New York Times coronavirus map tracking the spread of the outbreak. The coronavirus outbreak has sickened more than 113,000 people, according to official counts, which we all know are not the most accurate with authoritarian regimes. 4,000 people have died, all but 884 in mainland China over here, and in at least 97 countries. So this is spread to over half the globe officially. We know that that is definitely not the case, and it is far worse than that. But if you've been following this map, or you can see it over time, these numbers have all gone up substantially. Italy is just in total outbreak and panic mode right now. Actually, all of northern Italy, something like 16 million people are under quarantine, and people are getting smuggled out of the country there. But that's no different than was in Wuhan or Iran. And there's so many places across the globe that are just starting to test, mainly the US. And that's, where I'm based in, New York, right around here. And my estimates are for every one case recorded, there are at least 100 to 1,000 additional cases not yet recorded in the United States. And I think that number kind of goes for everywhere around the globe. And if you look in Nigeria here, this number has remained so low. 1 was recorded in Nigeria last week, and now it's up to 2. Now, I don't know so much about Nigeria's infrastructure and their medical system and their chain of command and government, but I suspect it's not as good as some of these other countries, and I think this number is more like 2 to 20,000. It's a little bit lower, a little bit higher. It's in South America now, it's in North America, Europe's had it, it's hitting Africa as we speak, Southeast Asia, and Australia. This thing is truly a global pandemic now, and there's no stopping. So what has been the response in the markets, and by particularly the Federal Reserve? They chose, in my opinion, a little bit too much ammunition too soon. Fed makes the largest emergency cut to interest rates since the financial crisis of 2008. 50 basis points, or half a percentage, meaning for every $1,000 that you have invested over that course of that year, you will earn 5%, you will earn $5 less in interest. So this action was taken on Tuesday last week, a little bit blown out of proportion. It is a fundamentally different issue. They're trying to increase the liquidity in the markets, but really all they're doing is kind of causing panic by using too much too soon. They might need this further down the line when, low interest rate loans for businesses needing CapEx to operate are really strapped for cash. In the short term and long term, really this only benefits wealthy individuals with this disposable income and good credit scores to begin with, because anybody without disposable income or, good credit history will not be able to take advantage of this. So it was a little bit blown out of proportion, and it's not really helping much. This is not a demand issue. This is genuinely a supply chain disruption, a global supply chain disruption, which is happening throughout the economy of the world. This isn't really going to help the issue. You have to, solve those supply chain issues, solve the virus, and then maybe you'll have a shot rebounding in a timely manner. But at this point in time, it almost looks like we're headed for a recession. So the US Central Bank has not made a cut like this since late 2008, shortly after the collapse of the Lehman Brothers, which was one of the largest banks in the world at the time. Fed leaders believed it was wise to move quickly as concerns mount as the plunging stock market and a severe disruption in every major economy. See, there is disruptions in every major economy across the globe, and I think that has a lot to do, if we go back here to China, China being the raw material and a manufacturing hub of the world right now, especially for the first world countries, exporting out to US and Italy and France and Germany and Iran and India, and their One Belt, One Road initiative. This really hindered that, and it shows. So we saw a risk in the outlook for the economy and chose to act. Fed Chair Jerome H. Powell said at a news conference shortly after the rate cut announcement. The cut led to a stock market rally, but it was short-lived, right? And that makes so much sense. The Dow Jones Industrial Average ended down 786 points, or nearly 3%, and the bond market flashed a warning sign as the yield on the 10-year U.S. Treasury bond fell briefly below 1% for the first time ever. Not a good look. So you don't want the yield curve to invert, and that's basically the short-term interest rates are higher than the long-term interest rates, which essentially just says there's a bleak outlook in the economy and nobody wants to have their money at risk in a bleak outlook economy, so people pull their money back and stock prices fall. So this was a little bit blown out of proportion. We'll see what happens in the long term. They're running low on ammo, and I think this was a disproportionate response. Let's just get into my Robinhood. So updates and trades for the week. I am now sitting at just under 8% negative for the week, down $1,000, the majority of which was today. If you see here, I was very, very high up this morning, and I forgot to order a stop loss sell for Invivio, which is a pharmaceutical company that is developing a DNA vaccine for the coronavirus. And as you can see here, if we just run down my portfolio, everything is negative, everything is in the red. The majority of my portfolio is cannabis stocks, which were down to begin with until regulation and really the industry matures in the next couple of years. But Inovio is the one I was talking about. So Inovio has tremendous volatility. You can see here it's up 89, or at one point it was up 200% within the last week, and I was just about to sell right here this morning, but I forgot to place that order, and I am kicking myself because now I am down over $1,000. Essentially, I'm down over $600 just in this one position alone. My equity is $1,400, average cost per share $13.46. I did dollar cost average in here. If we go to my history, so we'll see I bought 10 shares at $4. This was really, really early on when I had heard about this company. Averaged in another $8 for 10 shares. Averaged in again, 20 shares at $9.95, 50 shares, $15.61, and another 50 shares at $15.88. This was the top of the first bubble on Friday going into the weekend, and then this was the last dollar cost average in on Monday when it had fallen, and I wanted to reclaim some of my capital gains a little bit sooner than maybe the market rebound would allow for. But we'll see. This position is still open. I still have 150 shares in Inovio, and I'm a little bit overexposed, and this was not the position I wanted to be in. But the analyst ratings, 7 ratings, 100% buy at this price point. I don't know when the last time this was updated, this Morningstar rating, but I still think they're a little expensive. That's really all the trades in my Robinhood portfolio this week, just dollar cost averaging into Inovio. For the DNA sequence, I missed out on this stop loss order. I would have made a pretty penny had I executed this. But alas, timing and market execution, or their lack of, you will pay the price. So if we look here, Inovio shares rally after biotech says human trials of coronavirus vaccine will start in April. Great news, April is a month away. That's just the human trials. They're still in the clinical phase. This hasn't even gone out to testing. Shares of Inovio Pharmaceuticals rallied another 12% Wednesday, a day after the company said it's accelerating its timeline for developing a vaccine to treat the coronavirus COVID-19. And experts start human trials in the US next month. The stock rose 43%, gained more than 2,505 in the last 3 months as expectations for the company's vaccine called INO 4,800 have grown, and the virus has spread to more than 93,000 people and caused more than 3,100 deaths. That's a lot of people dying. That's a lot of people infected. We did reach a new milestone. This is now over 110,000 people, a little outdated. Backing up here, so just backing up to Robinhood for a second. Robinhood had problems last week going down on the biggest, maybe most important trading day of the year as of yet, which was last Monday and Tuesday. They assured us that they're working very diligently to make sure that this never happens again, which of course the following Monday, today, it did, right around 9 a.m. And I don't actually know if this was a Robinhood issue or this was the freeze out of the markets with the circuit breaker activating, but it seems like it was a little bit delayed after this, so I think this was truly a Robinhood issue. But people are flaming online and fuming that this happened for a second week in a row, not being able to execute orders on another one of the biggest trading days of the year. And I just want to read some of these comments because these are hysterical. The Robinhood tech is so great. The app doesn't work in markets that do not go straight up. So glad I never joined Robinhood. How is it your site down two of the most volatile days in stock market history? Billions were wiped clean today. Unbelievable. Absolutely right. Robinhood, after experiencing 2 outages, I wouldn't recommend using Robinhood as your stockbroker. E-Trade and Interactive B are free to trade too, but the outage is not terrible as Robinhood. I am really upset with Robinhood. Robinhood is worst stockbroker of the year. Another day, another at Robinhood outage with no accountability. This is a serious issue. They have to fix this. I seriously might switch most of my brokerage to Webull. I'm not a fan of these outages. I love Robinhood. I think they've done great in the past, but they have so much to improve on, and they really have a major lack of accountability here, and it just can't go unchecked like this. Something has to be done. I failed to mention Inovio on Friday was actually the highest volume traded stock in the stock market with more than 82 million shares being traded. Now this is pretty incredible because it dwarfs GE and Apple combined. That just goes to show you the amount of volatility and the amount of volume going into trading in Inovio, which is a tremendous opportunity if you can time it correctly, which I did. And then I didn't execute my stop loss order. So in the end, I didn't. So rounding out here with my dividend growth portfolio with M1 Finance. This is a passively traded portfolio, meaning I just make direct deposits in and the online brokerage takes care of all the rest as far as trading and selling goes. I just allocate percentages of my pie to certain companies, and these are my holdings down here. These large jumps here are $1,000 each of deposits, and I have since deposited $25 every week into this portfolio, and it was going pretty great, 10% returns up until about here. And this is where news of coronavirus started hitting. And you can see it started going a little bit lower, a little bit lower, oh, big dip. A little bit lower, oh, big dip. Oh, dead cat bounce, a little bit higher, and now we're back down. And so this dead cat bounce, what that is a little bit of a hiccup in the market where people try to dollar cost average in on the way down and essentially catch the falling knife. And that could be good if you have enough capex on hand to accommodate that and dollar cost average in all the way down and hopefully all the way back up. So it's the least amount of risk with the most amount of reward for that strategy. But as you can see here, I am down substantially with this portfolio. 15% all-time return, which is horrible. But when you factor in that I started this in the longest bull market run in history, we had not had a correction, we were on shaky ground to begin with, and then the coronavirus hit, it kind of makes sense that I'm down. But the important thing I want to show you here is that my strategy is still working. While my gains overall are negative, in the long run these will be positive. I'm really paying attention to these earned dividends, which have only gone up and only will continue to go up. So if we actually go to the 1 week here, you can see that my capital gains went way, way, way down. You took $400 down. But when you go into earned dividends, I actually gained $6 of earned dividends. So I really don't care about this capital market gains number up here. It really doesn't mean much to me. I really pay attention to these earned dividends, and that's the compounding, that's the growth strategy of a passively traded dividend growth portfolio, where you essentially just reinvest all your earned dividends and compound that way. So the longer, the better, the more cap that you initially have, the faster you will compound over time. Well, there you have it. Another week of tremendous news. There's so much to go over. I hope you enjoyed watching. I really hope to get these videos a little bit more structured. I haven't set up a consistent schedule yet, but there's just so much news. I just have to put a video out today. I really want to get this channel started. I would so much appreciate your support. Thank you for watching. If you enjoyed this video, smash the like button. Please subscribe, hit the notification bell, and make sure to comment down below. Give me feedback of what you want to see, because this channel is for you as much as it is for me. Help me help you. Help me help you. Just a reminder that there's no right time to do anything. If you have an idea, do it now. Let all the naysayers say what they want. Let all the people that boost you up, you can hear that, say what they want, but in the end, it is up to you. Your motivation, your imagination, your inspiration. Don't let anybody tell you otherwise. Just do it. Just execute. Your time is now. If you need a wake-up call, just do it now. Thank you for watching. I appreciate you so much. See you next time. Catch you later, Fireflies.